Hello, welcome to Any Answers Answered for March 2022. Two questions from the pages of Any Answers as ever. And our first question this month comes from the Wanderer and is actually a topic that we covered on Tax TV in quite a lot of detail this month. The question, Tim, is that it's a final claim for statutory sick pay rebate. And his question, or her question, the Wanderer, is quite simply, have HMRC completely lost it? I will let you answer that specific question in a second. The Wanderer says, today's missive from HMRC gives 1 week to make the final coronavirus SSP claims when many employers won't have even run the payroll before the 24th of March. It's a very short question, so perhaps over to you, Tim, to answer it. Have they lost the plot?
Yeah, well, this is one of the COVID-related provisions that is going to come to an end in March. Statutory sick pay for several years now has not been reimbursed by HMRC. George Osborne changed the rules when he introduced the employment allowance, a credit against secondary class 1, and removed the entitlement of smaller employers, fewer than 250 employees, to recover a percentage of SSP. But when COVID struck, the government did two things. First, they suspended the 3-day waiting period before an employee became entitled to SSP. That 3-day waiting period will disappear in March, I think 17th of March, 25th of March is when the 3-day waiting period disappears, as all of the coronavirus provisions from the Coronavirus Act 2020 are terminated effectively. But the rebate part of it is a bit different. The rebate did originally operate until the 30th of September last year, but and then stopped, but it was then reintroduced from 21st of December 2021, and it enables the small and medium-sized employer to recover the SSP from effectively the government. Well, that rebate scheme will finish for the second time on the 17th of March. So it'll only be in respect of qualifying absences through sickness or incapacity to work up until the 17th of March that an employer will be able to recover, if they're small or medium-sized, SSP from HMRC. But here's the catch, and this is what has prompted the question posted by Wanderer. HMRC have emailed customers, as they call us, telling us that the rebate scheme will stop on 17th of March, but going on to say that you have until 24th of March, just a week later, to submit any new claims for absence periods up to the 17th of March. And it is that timescale, just 1 week, that quite rightly Wanderer has drawn our attention to. And I'm afraid he's right. That is what HMRC are saying, and that is in accordance with the legislation. So in answer to Wanderer's question, have they totally lost it? Well, I think I'd have to say yes.
And one of the really important points to pick up there, the 17th of March is a Thursday. It's also St. Patrick's Day, but it's a Thursday, meaning that the 1 extra week takes us to the 24th of March, which is also a Thursday. And the vast majority of payrolls are run either the very last working day of the month or the last Friday, which would be the day after. So businesses need to watch out for this, because otherwise, by the time they realise the problem, it's going to be too late to do anything about it.
Exactly, it doesn't help. But I don't know, it's not too late for HMRC to change their minds and allow a longer period for making these final claims.
Okay, our second question this month comes from Julie T, who asked the question about directors' remuneration. Apparently, Julie says in her question, we're having an office discussion. Well, we're all going to join in with this office discussion now. We've got a single person limited company with a 31st of May year end. No salary was processed until October, when 7 months pay was put through from the 6th of April through to October. They're going to accrue 2/7 of it, which seems reasonable. That's the period before the end of May. But the question is basically, do we accrue it, or should we put it in the director's loan account in those year-end accounts? There seems to be a disagreement in this situation. So question, I guess the question for us, Tim, is what are the tax consequences of those two possibilities?
Well, it is an interesting question, and we need to separate out the issue of how is it taxed in the hands of the director and how is it subject to PAYE as far as the company is concerned. There is, of course, also the corporation tax question for the company. And it's difficult to tell from the question exactly what it is that Julie T and her colleagues want resolved here. But let's just look at the information given. We are looking at a sole director shareholder company, so a one-man, one-woman company, let's say. And the implication there is that there is no service contract. So I would assume that we don't have any actual entitlement to remuneration. And this is relevant in terms of fixing what you might call the tax point for PAYE, and also in terms of the assessability on the individual. And the tax point is set by Section 18 of ITPA, the Income Tax Earnings and Pensions Act, and that treats the amount as received and hence taxable at the earliest of 5 potential dates if we're looking at directors. Rule 1, the legislation sets it out in terms of 3 rules, and we take the earliest. For ordinary employees, not directors, we just need to look at rules 1 and 2, and we take the earlier of when payment is made of or on account of earnings, or when a person becomes entitled to payment. And by the way, HMRC would argue, and we must accept, that crediting a payment to a director's account on which the director is free to draw, so if it's unfettered, that would constitute payment. So rule 1 could indeed apply to a director where the earnings are being credited to a director's account. But then rule 3 goes on to say that if the employee is a director, then we take the earliest, if earlier than rule 1 or 2, of the time when the sums on account of the earnings are credited in the company's accounts or records, whether or not there's any restriction on the right to draw the sums. Or B, if the amount is determined by the end of the period, the time when the period ends. Or C, if the amount is not determined until after the period is ended, the time when the amount is determined. Now, if we then apply those rules to Julie T's scenario, it seems to me that the earnings have not been determined until after the period has ended. We're looking here at the year to 31st of May 21, and that would mean that if we take Rule 3C as the earliest date, the tax point would then be the date when those earnings, I'll need to remind myself, were processed, which was 31st October 21. So that would be in the year to 31st of May 22. However, could one of the other dates be earlier than that? The time when sums on account of the earnings are credited. Well, they're not being credited until October. They weren't credited. What we're doing is doing the company's accounts now. Was the director entitled to them? No, he wasn't. So it does seem to me that the tax point for this is all going to be 31st October 21. So that's for PAYE, and also that would bring it in as taxable income for 21-22. But having said all of that, we've then got to ask what the corporation tax position is. And I see no difficulty with the debit to P&L for 2/7 going in that year to 31st of May. That will give corporation tax relief. The payment as per that tax point I've run through is still going to be within 9 months of the year end. And actually, I'm not sure I could care less where that debit to the P&L is then credited. Whether you credit it to accruals or to the director's loan account, I'm not sure it really makes any difference.
So a large number of different factors to think about, as is often the case with the questions we pick. Not just one simple answer, but multiple things to consider, multiple things to worry about. Hopefully that was useful to the Wanderer and to Julie, and many other people, of course, as well. Do keep posting on the pages of Any Answers, and perhaps next month it'll be your questions we have a look at. But for today, bye-bye.